Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Thursday, February 19, 2015. Today folks, I want to make a follow-up on the last market report that we made last week when there was a rally among the materials sector. So today folks, what happened is that Germany decided today to refuse the proposal of the Greek government to actually have an extension of a loan program. So this is actually a standoff that there is between Germany and Greece, and so far seems like even if there's a standoff, investors are expecting some positive outcome though, because so far we have markets, S&P 500, that still remains neutral within a sideways formation. So what I want to do in this chronicle is first of all to make a follow-up on the last market report about the materials sector and to show you the sector that could break out, that could give a lot of bullish signals if ever there's a positive outcome concerning the Greek situation. So if we take a look at the material sector, when we talked about it, it was on February 12th last week, and today the material sector is able to slightly maintain its rally. Most of the stocks I've shown you though are still in a position where you should continue to hold on to them. Those stocks include stocks like FMC. You should continue to hold on to that stock. It has not broken down its support of 61.16, so it's a hold until it doesn't go below that point. POLYONE Corp, until it doesn't go below 39 bucks, you hold on to that position. Same thing too for CYTEC Industries. Until it stays above $51, you hold on to that position. Actually today it's making another breakout on that stock, but since I've talked to you about that stock around 52 bucks, right now we're at 53.50, so it's not really a point where you can take some profit. At least at 5% or so, this is the point that should trigger your first profit-taking opportunity on a stock like CYTEC Industries. Dow Chemicals, since February 12th breakout, is staying flat. And the paper sector, though, this is the sector that has not performed as well as other stocks in the materials sector. For instance, Norbury is having a correction, but as long as it remains above 27.44, which is that support, you should continue to hold on to it. Resolute Forest Products so far is not doing much, but maintaining its upward trend, so it's a hold. And the iron and steel vector, well, there's ArcelorMittal. I told you that we needed that stock to go above 1050. Actually, I didn't look at this, but the day after I made the chronicle on February 13, they released their earnings. Good job. They did some good with their earnings. And if you bought that stock, though, I hope you were able to take some profit, because right now we're reaching a new resistance on ArcelorMittal and we're forming a new sideways formation. So the new entry point is going to be around 1150 if you were unable to get in that stock around 1055 when the stock broke out on February 12th and when I made the chronicle. Allegheny Technology having a slight correction, but it's still a hold as long as it remains above 31.67. And in the copper sector, so far there's FCX, which slightly broke out, but really a slight increase. So if you bought FCX, you hold on to it. So far the stock is unable to reverse that downward trend yet, but it could if ever the rally in the materials continues. So FCX is still a stock to be watched. If you bought it on February 12th, I think you should continue to hold on to that long position. Now, the sector that is showing some positive sign is the energy sector. One thing we'll take a look at is by looking at how oil is doing. On marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below. Well, on Market Gurus, we did publish a list of the best stocks in the energy sector, and I'm going to show you some stocks among that list. If you want access to the full list, make the free trial. It's free for 10 days on marketgurus.tv. So let's take a look at this, for instance, here. The fact that oil is unable, I'm talking about USO, is unable to go below 18 bucks, for me it's a point that, psychologically speaking, where investors are reluctant to let oil go further down. So it seems like at this point, there's a bottom on oil. So if we take a look at the energy sector, for instance, though, those are the stocks that you should watch for an eventual breakout. PXD, higher than $162, will be a clear entry point for swing trading. Southwestern Energy, higher than 27.678, will be a clear entry point for the swing trading because it will break unimportant resistance. Denbury Resources, higher than 933 as well. CONSOL Energy, higher than 34.18, will be an entry point as well. So among the list here of the stocks in the energy sector those are actually the best picks that we found on marketgurus.tv that could break out if ever we actually have a positive outcome concerning the Greek debt situation. But so far there's uncertainty on the market. The rally that we had in the materials last week has not been able to perform as strongly, but most of the stocks are in a situation where you should continue to hold on to them. And if ever there's a positive outcome, energy stocks, we believe, will offer the best potential for entry point for swing trading. And the stocks that are highlighted with an S, I don't know if you can take off my picture here. Thank you. So if we take off my picture, you can see the graph here of PXD, SWN, and DNR, those stocks here that you can see on the graph. So that's it, folks. See you next week for your Market Chronicle. This was Christian Charlo from MarketGurus.tv. And never forget, the more money you make, the happier we are. See you next week.